Hello and welcome to Finextra. I'm Thea George and I'm here with Joost Bergen of Cash Dynamics. We're at EBA Day 2017 in Dublin and we're talking about liquidity management. Joost, thank you for joining me.
Thank you for having me here.
Can you tell me about some of the challenges that banks face in the liquidity space right now?
Now, liquidity and particularly the liability gathering of banks or funding the balance sheet has changed dramatically. We all know, of course, we have low interest rates, transaction fees goes down, so the business model is under pressure. But nowadays with the LCR ratios in place and also the leverage ratios, banks should be much more precisely and much more tweaking towards the clients which deposits they really want to have. In the past they want to have everything, today they only want to have a portion. And that's something, when you look at the ecosystem of liquidity, a lot of corporates, particularly the smaller corporates, don't understand that. They think, I bring 10 million, why don't they want to have my 10 million? Why only several of a portion of that? So I think that's changing the game, and as I call it, this is the end game of liquidity after the payment processing is, okay, this is the funds I really want to have from a selective group of clients and a selective portion of liquidity. And that's changing rapidly.
So what about on the corporate side? What challenges does this changing situation create for corporates?
So banks are selective, corporates should also be selective, but for corporates also a challenge, in particular, again, the smaller corporates, which most banks are interested in, is how do I manage my own operations? And a lot of these corporates manage it through Excel. It's a free tool, so it's cheap for them, but it's not a tool, I think, which is preferable to use from a risk perspective, particularly not on an operational process. So that's a challenge for corporates at a whole, but I think also for banks, it's also interested to help these type of corporates with some tooling to replace actually the Excel environment. So for the corporates to better manage the liquidities, for the banks to say, okay, this is the liquidity I really want to have. So it's also a whole de-risking profile is improving. So I think that's are the challenges we are facing at the moment within this ecosystem of liquidity, banks versus smaller corporate organizations. Yeah.
So what's the solution to these challenges?
You see that banks are providing tooling to corporates in the portal environment. They integrated more the trade finance and FX and the cash portal into one. But I think they can go one step further. One company I worked with is Reval, as a corporate treasury provider, and I also they also bring this technology to a white labeled solution for banks to bring it to their clients. And the benefits for clients is really to have a much more professional tool to work with, and also a tool that really enabled them to much better understand the liquidity position. For example, the whole cash flow forecasting. And that's still a point banks don't go in at the moment, but I believe this is a piece of technology that will enable banks to do better, strengthen the relationship, and at the end also strengthen, of course, the liquidity they're seeking for on their own balance sheet, because it is less volatile balances. So that's, I see, as one of the opportunities for banks to go through, to use technology to do something better for your corporate client groups. Yeah.
Joost, this has been great. Thank you very much.
Thank you.
And thank you for watching.